Everyone, it's Nick with Us versus Herd. If it's your first time here and you're enjoying the content, hit subscribe. If you want to get notifications for when we go live Monday through Friday, 30 minutes after market close. If you want to get connected with the UVH fam, you can join our free options trading group. The links are below. Whoa. The links are below, and the links to our Discord as well. So far, who's here? We got FC here. We have Josh. We got Jeff. Brendan, what's going on? If you're here, say what up. Definitely want to see what's going on. Prodigy Jordan, what's going on, Prodigy? Hope you guys are having a good afternoon. Made it through yet another day in the stock market. Hey Tom, how you doing? What's going on, Hamed? Glad to see you all here. Brian, what's going on? Brent. Sovan. Some new faces, some old faces. I love it. I love it. If you made money today, comment got paid. If you lost money today, comment learned a lesson. Yo, Billy. Shotgun Dovey. What up, Dovey? Project up 140 today on CRM put. Yeah, very interesting day. CRM. I haven't looked at them in a minute. Nice. Yeah, Tech definitely lagged behind. Sylvan got paid. Billy got paid. Chewy is yellow. Baron got paid an IQ. Josh. Billy always learning lessons. You gotta take those lessons and move forward. Learned a lesson unrealized. Same. You guys sucked. Made a killing with the put credit spread on SPY. Yeah, it just we'll go through that, Rich. We'll go through SPY, man. That's some crazy moves, but in reality, it just didn't go anywhere at all. I mean, it's up 89 cents today at close, but was definitely interesting. For me, I'm down like 25 bucks on the day, which, you know, it's not good, but it's kind of what I expected in turning things around. Like when you're in like a losing period, and kind of what I'm going to talk about is like turning things around from like a losing streak. When you go through like a losing period and you seem like, hey, I can't hit trades. I'm not seeing the market there I want to be. You know, you still got to trade. You got to be more careful, but also starting to minimize those losses and turning them into positive. You know, we were down. We've had down 180 days, down 150 days, and now the days are being like, you know, we're down 25 today. So it's getting better. You can't turn things around all in one day. You know, especially if you did like a week or two worth of losing or more of that in a row, you got to keep kind of pushing through. You know, what trades did we do today? Let's see here. Let's trade. So what? And so I don't know. Do you guys have this problem? So the problem that I have with Tastyworks on PC, I don't know. Let me look at my Mac real quick. Yeah. I don't know if anyone here uses Tastyworks, but I have the math gets all messed. The math, I don't want to confuse anybody, but the math gets all messed up in here where it takes your see here, you're on IBM P&L day, it made it realized. It's just I don't like to go through it but I also don't want to appear like sketchy either, but I don't want to go through it and waste you guys' time like day in, day out, and be like explaining why Tastyworks is not accurate. So what I'm going to do is actually just go through the orders and then go through like what I paid for it and what I sold for it instead, because like the P&L on IBM is wrong. P&L on Microsoft is wrong. Shopify should be right. ETVI should be right, but Alibaba should be right, but I put those trades on today. The trades that I didn't put on today are most likely wrong. So I don't want to confuse anyone. So one of the things whoa, getting crazy. So one of the things, like when you're on a losing streak, you think about the stocks that you trade, and a lot of times you can trade for a while the same stock over and over again and get gains, right? And then one day, like, you keep trading it, you keep losing on them, and then you keep, it could happen for a week, it could happen for 2 weeks. If you have like a one losing trade on it, it's not so bad, or two losing trades on it. But if you lose like 3 or 4 times in a row, you should probably reevaluate on, hey, why am I losing in the stock? It used to be a great winner. Why am I losing in the stock? Like IBM and Microsoft, I made a lot of money on over the last few months. But recently IBM and Microsoft have not been paying me. So what I did today was, like, at open, actually I missed open. Yeah, I didn't close these out till like 10:30. Market open was like 8:30, so I was actually gone at market open today. So I didn't get the best prices for this. Definitely would have been if I closed out Microsoft and IBM, when it was spiking this morning. Like if you look at Microsoft and you look at IBM this morning, we definitely would have been better closing out like at 107.50, 107.60, around up in here, versus like when I closed it out, it was like 10:30, was like down here when it was falling. So, but basically sometimes you just need like a reset. Sometimes you just do a half close to see where you are, use high liquidity, get in and out. Yeah. Sometimes when you're on a losing streak, you just gotta cut it and start over, hit a reset. And the only positions I had on today, going in today, was IBM and Microsoft. And really, this morning I was like, okay, well, I'm just gonna reset and start over and kind of go back to what I want to do, is just trade the movers, and that seems to be going okay here. IBM. So IBM, let's go into yesterday. Kind of show you the orders here. Actually, I opened up IBM a couple days ago. So IBM, I had the 134 put, the 137 call. It did spike up. It was profitable, but when I closed it out, I just wanted to do a reset. Sometimes you just have to do a reset. It's better to reset, gain whatever capital you can back into your account, and clean slate it and go from there. So that's what I did today. Because you can obviously incur, especially like in a sideways moving market, you could incur more losses. Like if you're being more patient, Like on Microsoft, like down here, you're losing money, or you can't see. Sorry. Like Microsoft down here, you're losing. I'm glad that I got out for what I did on Microsoft. IBM, if you were more patient, you would have been rewarded. But I mean, nobody knows which way the market's going to go at any given time. Like Microsoft's going down while IBM is going up, But what I need to do is rotate the stocks, trade some new tickers, and that's what I did. So IBM took a small loss, cost me 112. I got back 80 cents, so I lost about $30 on that. Microsoft is a little bit more complex because there was a lot of orders, and then I averaged down. Let's see here. My original position I put on for $1.11. Then I got 32 cents back, and then I paid 27 cents for the 105 put. And then we had the 107 call. Bought it yesterday for 70 cents. Got back 76 cents. I actually still have. So on this trade, I think if it all goes sideways, I'll lose $70 on the Microsoft trade. I was saying about. It's saying that my P&L open here is 82, but it's not accounting for the gains that I took on the 108 call and then the 107 call. So we'll probably be down like 70, 60 bucks, something like that. I did leave the 105 puts just because Microsoft was really struggling around that 107 area, which Microsoft has been struggling around that 107 area. So that's why I left the 105 puts, and I also had two of the 105 puts. Triple resistance at 280. No, triple resist. I think Rich meant 280, not 180. You know. So what I did, we got back what we could. I still have the 105 puts. I cut IBM entirely, and then I started loading in some newer positions today. Let's go in today then. So then I traded some tickers that I haven't traded in a long time. Shopify I traded, Alibaba, and again, I got to get better at showing you the screen here. My gosh. Oh, man. Yo, Kit, what's up? Let me actually move this chat over a little bit. We can move this over. There we go. So I haven't traded shop in a long time. I traded Alibaba. Alibaba, I actually haven't had a position on in a few weeks. And if you guys know, I usually have, I would, for the last 6 months or so, I would have a position on Alibaba pretty much almost every day. And then I stopped. Like sometimes, Matthew, sometimes when you're on a losing streak like I have been, you got to stop trading the names and take a break. Like Alibaba, I was very disciplined. I made a lot of money. And then I had I lost a few trades on it, and I took a break. And now I'm kind of revisiting that. Like Microsoft and IBM, we made some good money, but then I was on a losing streak with them. So I'm rotating these tickers out and trading some other things out. And then also, like we talked about the other day, is in this low volatility environment, like when the stocks are moving sideways, we have to trade. If you're swing trading or you're day trading or whatever the case is. If you're buying options. Now, shorting options is an entirely different game. You can do what you need to do. But in this case, buying options, if we're buying options like I have been, you have to trade the movers. So I traded shop. I'll pull these up here. I traded Alibaba. Alibaba's not moving as much, but I'll kind of explain to you why I traded it. And ATVI had like a 40%. Show you why did you lose? It just happens, man. It just happens. Sometimes sometimes the tickers you're trading you exhaust. Sometimes you're not seeing the market correctly. Sometimes you're just in a slump. And honestly, I've been in the slump for the last few weeks, so it is what it is. It's kind of like writer's block or something like that. It's hard to say why did you lose. Like in retrospect, it's like, oh, I can't believe I lost there. But I think that why am I still trading bearishly when we're having this bullish upturn? Like, why? Don't worry, kid. I'll never lose again for you. I'll never lose again just for you. But I mean, it happens. Like on my best days, sometimes a lot of people lose money. On people's best days, I lose money. It is what it is. We're all trading different positions. We're doing the best we can with what we have. Yeah, you get used to a way a stock moves, and then it changes behavior. Exactly. So that's why when it changes behaviors and you're not seeing it correctly, like I just changed all my tickers. I went into some completely new stocks like ATVI. I haven't traded in a long time. Shopify I haven't traded in a long time. Alibaba I haven't traded in a long time. However, all of these stocks I have traded in the past, so I do have experience with them. But you get to a point where just like it's time to rotate out. You've had the first string guys making you some money for a long time. It's time to rotate those guys out because they're freaking tired. They're done. How do you check the number of trades on Tastyworks? It's actually if you're on Tastyworks, I'm not going to do it right now because it reveals too much information. But if you click on this arrow for accounts, it'll show you how many trades you did that day. So just click on under accounts, this little arrow up here, and you're good to go. Yeah, Matthew, hey Marine, how you doing? Matthew, the Greeks change. IV changes. I mean, a lot of things change. Option prices changes. You know, could be anything. So, anyways, let's go into shop. What I was looking at shop, and shop, I bought the 170 put, 180 call, and I bought it for 172. I think I got a little bit better pricing on here. Yeah, I got 169. So it's in with $3 of each other. So I paid 172 on Tastyworks. I paid 169 on Thinkorswim. You know, it just all depends on the upticks and the downticks and all that. But what I was looking at here, so yesterday Shopify had earnings, and they were kind of wishy-washy. They weren't that good. And I was just kind of watching this stock. You know, I've been watching like Shopify, ATVI, and stuff like that, and I haven't made a move. I've just been staying patient. And Shop, you know, they missed out on their earnings, and guidance was in line, and you know, it was kind of wishy-washy. But the one thing that I would say is, like, for Shopify, I mean, they're sitting at highs up here, and they've been, you know, like I said, in low implied volatility, you have to go where the movement is. And as you can see here, like, implied volatility, IV got crushed in here pretty good. Is another reason why I bought premium in here. Got crushed pretty good, but we're having pretty crazy movement. You know, Shopify went from 180 today. It opened up at like 178, went up to 180, came down to 172. I mean, it had like a $8 swing here in the first 15 minutes, and then it just kept going down. I actually put a position on, let's see, the exact time. The exact time I put a position on was 10:40 this morning. So right in here on this bar in here, I put a position on right as it was coming down. I'm currently down in that position like $20, which is not too bad. So I paid $1.72. I'm down $20 on it, and probably the main reason why I'm down on that position is because it just went flat the rest of the day. I mean, even though it is lower than where I paid, it just was like flat. It went down. It did drop down to like 171 and then bounce back up, and then it kind of flatlined. You know, we closed at 172.02. So Nick said 280. You know, so Shopify, I was actually bearish on just because of this 180 wall here. It touched 180 twice and got rejected pretty hard, and then it hit 180 here, and it came all the way down to it hit 180 up here a couple of days ago. It did come down to like 160, but it came all the way back up to 175. So, you know, I definitely think there's movement. On Shopify, you know, it said the expected move is plus or minus $4 by Friday, which it has been exceeding that in enormous fashion. So, I mean, today it moved $8, and the expected move was like $4, $5, and then I don't know what the day before the expected move was, but it moved, you know, from 160 up to 175. So, normally I don't trade Shopify just because of the volume. Oh man. But as you can see here, these actually have volume. Like the 180 call has 1700 volume. The 180 call I just have it in there for some protection. If Shopify does make a run for 180, you know, we'll get out break even with a small loss. I am hoping for sub 180. I was actually looking at possibly like 167.50, 165 area was my target for this. And these were traded about, they did 917 volume today. The bid and the ask is a little bit wide. So for Shopify, you just got to be patient. If you don't get a fill, like I wasn't like putting an order in and then canceling it right away. I was just letting it sit there for a little bit because on stocks that don't have super high volume and the bid and the ask is kind of wide, you kind of want them to come to you. So like if the mid price for, let's bring up Shopify here. You know, if I was looking at this right here, you know, right now it's going, I paid 172, it's going for 152. But it's calculating the bid price. What I do, because sometimes like on stocks that you don't, on stocks that aren't especially high volume, you know, I actually quote it like below the mid price. So we go, you know, I'll go 130 to 152. Rich, you need high liquidity, but sometimes the action is in other places. So I would say like right now these Shopify options aren't low liquidity, but they're not like high liquidity. I mean, they're kind of in the middle. They're kind of in the middle. So I would underprice this. Like I would do 140 and then work your way up like a couple cents and work your way up to mid price, because I've been getting fills like below mid on low liquid stocks. And the same goes for like when you're trying to sell it too. Like if you're trying to sell it, you know, try to put it a little bit above the mid price and see if someone will reach for it. And you know, it does happen. I'm not saying it happens like every time, but you know, it's worth a try to get a little bit better price. You know, 10 cents is $10 is a pretty good deal. 20 bucks, you know, so it could help you out. You know, it's not huge, but you do it over and over again. Yeah, Rich, when I did the bid, the thing is when I did the bid and the ask, when I was looking at the trade, they weren't this wide. They weren't this wide when I was doing it during the day. So that's Shopify. So yeah, it's a low volume stock. If you're new to trading options, probably not for you. It's not the highest volume. Baba, I also put a bearish trade on. Let's get this going here. Alibaba, I bought the 167.50 put and the 175 put, and I paid $1.06 for it. Yeah, we can check out Canopy. Sure. Let's go into Alibaba. So I put that trade on at 10.56, and the reason why I went bearish on it was just because in this 170 area, it's been really struggling. So I went on a bearish strangle as well. I was looking for it to kind of come down to like 168, 167.50. Take that trade off. And if you're looking at Alibaba here, I mean, it's just been really, I mean, it looks like it's inching up. It could break out, and if that's the case, yeah, we could go to 173, 174. But I was just playing off the rejection here. It did recover. It's kind of choppy today. I mean, it did touch 171, then came down to 169, went up to 170, and then came back down to like 169 area. So, you know, very, very sideways. Very sideways. You could have made some money on this if you're day trading it, but obviously you got to time it. You got to time it pretty well. And then ATVI did a couple trades in there today. We realized, so I put on initial position. I actually bought them separately. I bought the 42.50 put for 53 cents. And then I bought the 44 call for 38 cents. And I put that on at 10.56 and 11.15. And it's a good thing that I added that call because, you know, it came down here. It just stopped right at like 43 before heading back up. And I was able to sell it for $1.24. So what is that? 38 plus 53? 38. So 91, so 124 minus 91, you know, 33. So we had about a 30% gainer on that. I took the profits because I had at that point, you know, ATVI at that point, I had the 44 call. I had the 44 call and the 42.50 put. So if it broke down, we would have been good. But it obviously went up above to like 45. So you have to realign. Like the chances of it coming back down to 42.50 are probably not good. So I realigned it. I took the profits and then I got a tighter strangle. So right now I have the 44 put and the 45 call. And as you can see, I got it for 89 cents. So not only did I make the range tighter due to theta, but I also made it I made it tighter. And I also got it for cheaper. So instead of like 91 cents, I got it for 89 cents and it's cheaper. So option pricing in ATVI seemed pretty good, and the movement was there today. If you look at ATVI here, it was sitting at a yearly low before earnings, and now it's trying to bounce back. However, it definitely could come back down here at this 45 rejection. So Canopy growth. Let's look at it. Yeah, CGC, they have earnings. They have earnings tomorrow. Does anyone know if it's before close, market open, or after close? I don't know. See if Tastyworks tell us. You gotta be careful what these guys tell you because CGC. Okay, saying CGC is tomorrow after the bell. You get a little more information here. Sometimes you got to be careful though, because you don't just check one platform. Check multiple platforms if you're trading earnings like before or after or during, because sometimes the platforms have it wrong. Like I've had it where Tastyworks was wrong and Thinkorswim was right, or Thinkorswim was right and Tastyworks was wrong. It's best to go on the NASDAQ website or whatever website you check for earnings, and also check the actual website too. There's if you go to the investors page, they'll usually tell you what day earnings are on. So yeah, it seems like a lot of hype. I haven't been trading CGC or the weed stocks just because I'm trying to get more discipline and get back more into my groove. Like I said, when you're on a losing streak, you kind of cut the fat. You don't want to take chances on stocks that don't make a whole lot of sense. And like the weed industry, it's all about speculation and doesn't make a whole lot of sense at the moment. Sure, it could go up crazy. I mean, tomorrow maybe CGC goes to $80, or maybe it goes to 20, or maybe it goes nowhere, and that's, when you're on a losing streak, you can't play those kind of games. You can't speculate. You can't, we made some money in CGC, we lost some money in CGC, but it's best to go with stocks that you can win on. And CGC, like weed stocks, I think it's difficult to win. Options are expensive. It does move a lot, sure, but you got to be careful. This is definitely an amazing run. However, they just slow bled them out since, from November all the way down to January. And then they decide to rip it up. So, it's also like the government has a huge impact on it. Weed regulation, all that. Like I don't typically like to trade stocks that are like dependent on regulation. Like I don't like to trade like FDA approvals. I don't like to trade like politics. I don't like to trade just because I'm more of a, I like the tech stocks because it's like, okay, these are what the sales are. This is what our company is doing. We're either going to go up or we're going to go down, based on those numbers. But like regulation and politics, as you guys know, like with, Trump in office and trading with Alibaba and Chinese stocks and stuff like that, tied up in politics. It doesn't matter if the company is amazing. It doesn't matter if the company does well. It doesn't matter if they smash earnings if politics is what's holding it down. But you could also use that to your advantage. But then you also, in your mind, like for Alibaba, for instance, it could be, we could wake up tomorrow and it says Trump announces, we made a deal with China and Alibaba goes to 180, 200 and we have a nice day. Or it says, we're going to double down on the tariffs and we're going to make them pay and we're sick of this. And then Alibaba goes down to like 150, 140, 130. You know, so in that case, in those scenarios, it doesn't matter. It doesn't matter how good the company is. It doesn't matter how bad the company is. It matters what politics are doing, and it's hard. It makes it harder to trade. Francis, same with Aurora. KO to the moon. Yeah, Coke. Coke has earnings. Coke has earnings tomorrow, right? Yeah, Coke is tomorrow. You know, we'll see. I think Coke is a tough trade. Just in general, I mean, you gotta be really patient with it. It's a very slow mover, and now we're sitting at yearly highs here. It could. I do think it's more interesting trade. Like I would rather trade earnings on this when it's like up in here versus if it was like down in here. It's not that exciting. Retail sales report for December comes out tomorrow morning at 7:30. Could have an impact on retail stocks. Yeah, Target was up like 3% today, I think. I don't know why. I got a notification that Target was up. I used to be a shareholder, but I sold my shares. We wrote it from like 60 to 80, so it was a good ride, but we got off the train. I guess you could have bought it. I guess you could have bought it again at 60, but it's hard to buy stocks on these massive declines. It's just hard. ALDX March 15th. I don't know what is ALDX. March 15th they have earnings. Yeah, the one thing that you got to be careful here is just the volume is just like complete. It's non-existent. I mean, you have the 12.5 call, but there's only 30 of these traded for March, and in February nothing was traded, so it's going to be tough. The bid and the ask isn't super wide for the 12.5, but at $8 you might just want to buy, trade the stock versus the options. Nvidia aftermarket. Yeah, Nvidia, I think Nvidia is definitely going to be an interesting one because are they going to pull off the hat trick like Apple did with lowering guidance before earnings to kind of soften the blow, or is this stock going to go down to like 100? We're going to find the truth. Looks like it wants to go up, but I mean, even though the market is rallying, this is stuck under 160, and what 292 from a 292 to 160, 152. I mean, it's tough. What's thoughts on Nvidia? They lower guidance like. Before earnings, they lowered it. Went from 160 down to 129, Matthew. So they pulled the Apple like, hey, we're gonna say, hey, we're gonna lower some guidance before earnings, so that way when we do the earnings, we're not gonna get actually blown apart to pieces. I mean, not saying they can't. I mean, they still could get blown apart. But in terms of like Apple, if you look at Apple's last quarter earnings, this is when they released the bombshell that they lower guidance, went from 150s down to the low 140s, but then earnings they went up. So earnings they missed earnings on lower. I mean they missed it by like a penny for EPS, but they they lowered their guidance and lowered the expectations, and they still went up. So, maybe that work. Maybe that'll work for Nvidia. Maybe because the bad news, they already hit them with the bad news. Maybe they'll go to 180. But I think that Nvidia is going to have some trouble with if the crypto market stays where it is. Like I said, last couple of days is the reason why I was riding up is because there was a high demand for GPUs. If you guys don't know what a GPU is, it's a graphics card that crypto miners would use to build their mining rigs, and the mining rigs needed the power to crack the algorithms and mine these crypto coins, right? And right now, with crypto being so low, it's not profitable. It's not profitable for you to build your own mining rig. It's more profitable if you want to do something with Bitcoin or crypto, don't build a mining rig. Just go out there and buy some Bitcoin or Ethereum or Litecoin or whatever you want to do. So just go out there and buy the coins versus buying and building a mining rig. And Nvidia is starting to feel the impacts. They wrote it. It was a nice ride. I mean, I couldn't believe it. Yeah, AMD missed and went up as well. That's how you know the bulls have taken over, Matthew. The bulls have taken over. Close your eyes, buy the dip. You don't have to be good at trading. Just close your eyes and buy the dip. Until that doesn't work, then you got to come up with your own plan. Yelp is just a train wreck. this chart is like, you don't know, like it's just horrendous. Let's go to 2 years just to kind of get some context here. And even the 2-year chart is just choppy. I mean, one thing that I think that you can take from this is that it definitely moves on earnings. Yelp is doing it right now. So yeah, it went from 38 to 42. Not huge. Let's see what the market was expecting. Market was expecting a $4.9 move. So let's say a $5 move. It moved 38 to 43 almost. So it's moved $5, but let's see what these calls were. What were the 38 calls? 38 calls. And the 38 calls. So if you bought it closed at 38.46. So if you bought the 38 calls, let's look at this right here. Also, volume on the 38 calls weren't very good. Let's go to 38.50 actually. That's probably better. There's actually volume on these. A little bit better picture here. So if you bought the 38 calls, you're paying mid price. I mean, I don't think this is entirely accurate. It should be a bit of a tighter spread, but last sold for 263. It's going for a high of 345. But let's just say it was like 263. It's trading for like it closed at 263. Down 21 cents from the day before, just probably because it was just like sideways, kind of dipped down at close here. Dipped down a couple once and it closed out of the money, so dipped down a little bit. So, and let's say it opens at like 40, 260, and tomorrow's Thursday. I mean, you're gonna have a hard time. You're gonna have a hard time making money on that. You're gonna be up 10, 20 bucks at best. That's gonna be tough. Yeah, I mean, these options are just out of control. But they were, probably, last quarter 44 down to 32. Then you're getting a good deal if you're buying puts, or whatever on this. I don't know what the expected move was on this, but I think that this was a 1,000% return, 500% return for a lot of the options I remember last quarter. So I mean, and then the quarter before that it went from 38 up to 44. So people were probably thinking 38 to 44, 45, 46 area. Now, if you guys look at here, it was a couple quarters ago, it was 38. And then it opened at 44, but then it went as high as it closed at like 48. So, I mean, but the question is, how patient are you going to be? It could happen. It does move on earnings. It does move, but what's the risk you're going to take? Like some people go in heavy on these earnings, and they take the position off. Like let's say they made some money, and then it rip it up, then they get really salty. You know, they get really salty of all the bags they left on the table. And if they think, like, let's say it opens right now, let's say it opens at like 42, people are going to think, well, if it opens at 42, it could run to like 44, 45, all those hold. But what if it like reverses back down to 38 and then you lose everything? You know, that's why it's kind of that's why earnings is kind of a gamble, because you're going to be overpaying for like some of that premium there. And in this case, you overpaid. You overpaid a lot of it. I mean, this is an expensive one. And if looking at past, this is a good example for like past earnings. What happens to a lot of people is like that have earning successes is that they probably won big in here on Yelp this quarter. Then they won big in this quarter. Then they loaded like, hey man, last couple quarters I made it big on Yelp. Then they go in deep. Then they start like scaling up their position. So like maybe here they did like one contract. Then maybe in here they did two contracts, and they like, hey, I made last couple quarters, I made bank on Yelp. I'm gonna do 5 contracts or 10 contracts, right? And then what if this comes back and opens up at like 38? Then you're gonna lose all of it. You're not only gonna lose all of your investment, but you're gonna lose probably your profits from this quarter and this quarter. So what's the point? So I mean, you just gotta trade. You gotta trade accordingly, analyze the risk, and stay the same size all the time. Trade one contract, and then even if you lose on this one, you made money on these. You're in good shape. But if you trade one here and win, trade 2 here and win, and then trade 5 here and lose, you're probably not going to be in good shape. Especially at these prices. Whew. Yeah, let's see what this 44 call. Yeah, this 44 call was going at 67 cents at close, and you bought. That's gonna hurt. It's gonna hurt. 44 call, Theta's 27, 67, 27. So that's gonna be like 40 cents plus like implied volatility. Crush. I mean, this is gonna be worth maybe even like. Maybe 5 cents. Maybe 10. Maybe 10 if you're lucky. If you get out quick. So it's gonna be rough for Yelp. Yeah, we did talk about KO. Yelp got that big haircut last quarter. Yeah. I mean, so it's hard to say. Sorry guys, I kind of went in the zone there for analyzing options there. For a second, I didn't realize that I was talking a lot about, kind of went deep in there. If I get too deep in there and I'm losing train of thought and I'm just getting too much into the option pricing, somebody stop me, because I go down, sometimes I go down the rabbit hole of option pricing, because I kind of get fascinated with the moves and how much options were, how much they are, and how much they're going to be worth. It kind of gets a bit intense in my brain. So I like to go down those because it's also a good exercise for me to understand and get a good handle on option pricing. And analyzing option pricing is if we're trading options, we should understand option pricing and how to analyze it. Joyce, I think we talked about this. JP, how you doing? VTech, what's up? Baidu, Jeff likes rabbit holes. Baidu. Been making money selling MU fairly quickly, Alex. Yeah, take those gains. They seem to go quick. Baidu. Baidu's just wrapped up in the. If you guys don't know what Baidu is, they're like the Google of China. They basically ripped off what Google's look and feel, and they produced it for China, basically. And it sells and it trades as BIDU. I think like any of the Chinese stocks, it's hard. VTech, I think it's hard to put a value on these companies. I don't know if they beat or not beat. You know, I think it's tough. I think for the Chinese stocks, like yes, there's movement. Baidu is probably, you know, it looks like it's calling up, but it just looks kind of slow and low. I think that Alibaba would probably be, it's more of an interesting chart because you have more two-sided action, and Baidu is just kind of slow and low and just sitting at the bottom here. It's really not doing a whole lot. We don't have, you know, huge swings here. So, I mean, if I were going to pick one or the other, I think Alibaba I would prefer to trade over Baidu. But I don't think, you know, in terms of earnings, like I don't think, even though like comparing Alibaba, you know, Alibaba did go up, but I think that it's just held back. It's just held back. Like Alibaba did great for earnings, and they're just held back. This should be probably $200-$300 stock. Once you are up on both put and a call at the same time, you realize the power of option pricing. Yeah, yeah. If you buy a strangle and you're up on the put and the call at the same time, it means that implied volatility expanded while you put that, like you bought when implied volatility was low, and then implied volatility expanded, and you got a freaking good deal. You got a really good deal. You know. Baba hold for decades. Yeah, I mean, I own stock in Alibaba. Baidu, I think it's tougher to trade because unlike like Alibaba we can compare to Amazon and e-commerce, and Alibaba has more of a global enterprise. They do stuff in the U.S. They're building their cloud network across Europe and in the U.S. and you know they're Alibaba's doing what they're doing, but Baidu is a closed search engine to China, and it's only in China, and I think it's hard to understand what Baidu really does or benefits, or like how much the government is involved with that. And I think Baidu is it's just tough to trade, and it moves slow. Yeah, JP, Nvidia. Oh, we did talk about Nvidia before you hopped on, so I won't waste the people's time here because they've already heard it once. So after the stream, just rewind a little bit. We did talk about that. Applied Materials. Let's see here. Good option volume. Right here, man. We got it. We got it right here. Applied Materials definitely looks like it's bouncing back here. Sorry, my but yeah, we did VTech. We did talk about KO. I think that now that it's broken above like the 40s here, I think 40, 43, 44 pretty easily. However, you're gonna have to be patient with it. You know, probably this type of stock you would want to buy on the red days, and you would want to buy calls on the red days and be rewarded, even though the red days are very, very tiny. You know, you're not getting huge red days here. Just a slow grind up. Any opinion on NBEV connected with cannabis market, but with much more predictable charts? I've been making money buying dip lately, especially when it started breaking 7. Yeah, I don't trade stocks under $10 that much, just because my win rate on stocks under $10 isn't that great. My win rate with stocks above $100 is a lot better. But you said you've been making money buying the dip once it broke 7. So, you know, what I would say is, I mean, it did bounce here at like 6. It bounced again a couple times off of 6, and does look like it looks like it wants to make another run at the high 7s, you know. But it's hard to speculate. You know, stocks like this that are just kind of getting going. You know, this is a penny stock that turned into like is turning into a legitimate company. You know, that's what goes from $1.30 to $10. Like all this is penny stock pumpers and dumpers. Like this whole area right in here is all penny stock pumpers and dumpers. Like once it starts showing up on the scanners for penny stockers, this is what happens. This is what happens. You know, and none of this is actually real. It's based on buying, selling, and shorting from penny stock pumpers and dumpers. You know, it gets into the newsletters for penny stockers. It gets crazy. So when people are like, well, it could go up to 10 again. Yeah, sure. You know, it went from $1 to $10, and we could have been rich, and we could have done this, and we could have done that. But you know, you gotta be careful that this was manipulated in here. Like if you're looking at NBEV, like in here is like real action, like real trading, real investing is going on here, whether it's robots or people or whatever the case is. But like in here this is manipulation. When you go from $1 to $10 and then back down to $3, it's penny stockers all the way. I own Pepsi for a year, not going anywhere. You gotta, Hamed, you gotta invest in growth stocks, or if you're gonna pick stocks that are not growth, at least have them be high paying dividend. You know. You have earnings tomorrow. FC's trying to drop some insider knowledge. I don't want to know. I don't want to know. Planning to take AMAT call options ahead of earnings. Okay. Yeah. I mean, AMAT, let's see what it's going to move. Last quarter didn't really move too much. Expected move is $2. So the expected move is like 5%. You know, do you think that it's going to move 5% or more? You know, when it comes to like for me, when I'm looking at earnings trades or before earnings or trying to get it, or anytime, you know, I always look at what the plus or minus expected move is. Like what is it calculating in here? What is it calculating plus or minus? Because all right, FC, you got you know, like if you're like, hey, yeah, a stock could move $2, that's fine. But if you put it in a contest, like for AMAT, that's 5%. That's plus or minus 5%. Now, if a stock moves 5% on earnings, that's a good solid move. If it moves below that, like 1%, 2%, you're like, well, that's, you know, it's just normal. If it moves greater than 5%, it's exceptional. So if you think that it can move more than 5%, let's say you bought these, but if you couldn't trade this too safe. You'd have to be one sided. You'd have to buy like a call at like 41 and go to 42. You know, if it went to 42, but you're not going to make a whole lot. You know, one thing that I want to talk about earnings is that you expose yourself to a lot of risk when buying options. You expose yourself to a lot of risk, but you're not actually getting much reward in return. So, you know, as you guys know, like trading options is always about risk and reward. What's the risk? What's the reward? Is this too much risk for the reward? Am I willing to do that? Sometimes you are, but you gotta find some balance with your comfortable. Some people like to have more risk and have high reward, but sometimes when it's high risk, you have to evaluate if it's high risk and low reward. There's probably better trades out there. You know, high risk, low reward, or low reward. There's probably better trades out there. We're coming up. We got 7 minutes left in the stream. If it was a value to you, hit the like button. Would appreciate it. If you're new here, say what up. I want to meet you. Where do you get that? Shri Pradhan? What do you mean? Where do I get that? What are you referring to? Are you talking about the plus or minus move? If you're talking about the plus or minus move, you can see it in. Hey, Angel, how you doing? Welcome. If you have Thinkorswim, it's right here in the right column. If you have Tastyworks, yo, Andrew, what's going on? Mark, how you doing? And then if you're on Tastyworks, the same way. If you're on Robinhood, it's SOL, man. They don't have the plus or minus calculation. Our CEO sent the email after EA to everyone, no help before earnings. Yikes. Yeah, I mean, I think for like before earnings email, I think every employee, like if you work for a public company, I think that it's always scary going into earnings and getting emails before that, because like if you were like ATVI, you got an email, you open up your email like, hey, I'm actually laid off today. That's not good. You know, or like Tesla, you know, they laid off people. You know, I think it's always like when earnings is coming up, I would probably be sweating my email box and be like, oh crap, there's something from the CEO in here. Man, it's before earnings, it's the CEO. Crap. You know, like you get like, you know, you're gonna want to bring your own toilet paper to work because you're not gonna want to use theirs there. You know, Kit knows what to do for AMAT earnings. Yeah. Yeah, but when options are overpriced, that's when option sellers can make a lot of money. However, just so you know, I mean, option sellers, there's risks there as well. Just like, you know, people think just because like if you lose options, if you lose buying options, the option seller there was no risk for, but that's not entirely true. Like if you talk to an option seller between October and December, I mean they were bleeding. They were bleeding from all sides. You know, they would roll things up, roll things down, roll things up, roll things down, and they were in trouble. You know. Anyways, definitely had a good chat today. Had a fun time in the market today. I know it's tough coming up a losing streak, but we're turning this thing around. Why Twilio premium was so high before earnings? Twilio just moves a lot. You know, Twilio. And I think a lot of people were betting against them. I mean, it's gone from $25 to $100, $119 in a year. You know, and when a stock does that, option prices get inflated for earnings because a lot of people don't think it's worth that much, or they think that maybe it's the best company in the world, that it could go to like 150, 125, you know. I actually don't trade it that much. I actually should probably look into this a little bit here. Option volume is pretty good. I did trade it down in here a little bit, but it wasn't not actively traded. Now that it's like above 50, almost $100 stock, it might be a little bit more fun to trade. And now that implied volatility is getting crushed on it, will be good for maybe picking up some options here. Probably would have been good to put a position on here today. You know, I was trading the after earnings today, like on ATVI stuff like that. You know, Twilio might have been a good trade. So I'll keep that in mind. I always forget about Twilio for some reason. I always forget about it. I keep meaning to trade it, and then I just don't. But I'll keep it on one of my charts here. So you guys have a good rest of your evening. If you are watching this later, definitely appreciate you for checking this video out as far as you did. Had a fun time. You guys take it easy. It's always us versus herd. Stay safe, stay green.